Thank you for watching this video. If you're watching this video, you have the AR application. So Mr. Rubino and I are going to go over this application with you. And if you have any questions as we go over this, let us know. So number 27, it says, what is the purpose of the funds generated from factoring? Factoring is another word for financing. Okay, so how much money I mean what do you from the funds that you need, what do you need it for? So most people need the money for working capital, to pay employees, whatever it is for your business. We want to make sure that we're helping providing the funds for your business to grow, and whatever that is. All right, 2028, the dollar amount of receivables now open. All right, so what are receivables? Okay, so I just Googled or whatever online. I'm looking at a balance sheet, and this is a balance sheet. You got your assets and liabilities on your financials. So your current assets, cash and cash equivalent. Obviously, this is how much cash is in the checking account or savings account of the business. The short-term investments. This is money that has been invested, typically maybe money that's been paid in advance for inventory, or maybe paid in advance towards vendors or utilities or whatever it is. Typically, that's a short-term investments. Now, accounts receivable, what that is money that's owed to you for the services that you've done. So, for example, you sent your invoice to your customer. So to say your invoice, and you say, hey, it's billed to your customer, your client, or so forth, and whatever you've done it for. And now you sent this invoice, this IOU to them, and now you're waiting for those funds to come back. And so and you might have sent one invoice, 2 invoices, 10 invoices, whatever it is, you add it all up together. And then that will be the amount of receivables that is owed to you. All right, average monthly sales. So hopefully that's self-explanatory, but approximately how much money does your business make a month will go there. The number of customers, obviously you provide either services or goods to a company, and whatever, and the number of those companies that you actually do business with will go the number of customers. All right, so your invoicing terms, 29, your invoicing terms. So what that means is, so going back to this invoice here, so in this case, and this typically is either based on what you and your customer decided, or maybe it's just your policy of your business. But right here, for this invoice, it says that please remit payment within 16 days of issue date. So according for this company, they're saying that it's 16 days is what their terms. But usually most companies will have anywhere from 10 days to 30 days. I've seen as high as 60 days. It usually depends on your customer and what agreement that you have. And so you just put that down with your invoicing terms. All right, the amount you intend to factor on a monthly basis. So how much cash do you how many customers do you look that you're probably going to need to get funding for? So that's what we want to know. The anticipated factoring volume. So on a monthly basis, how much cash do you need? 200,000, 100,000, $500,000, whatever it is. Have you, with this business, have you ever factored before? obviously, if it's just no, then you just say no. If it's yes, just put down who. Are your receivable pledges a collateral? So meaning like, do you have another lender that's involved that says that they're, along with all the assets of your business, the receivables is one of the assets that they are requiring, or they're using as collateral for your business. So we want to know that, and if the answer is yes, who or what financial institution? Do you have any other commercial loans or leases, like equipment leases or business loans? If yes, please list. And maybe that'll, be also on your balance sheet, but go ahead and list there. Are there any extended terms granted? Okay. So are you extending any other terms to your customers? So are you are you saying, do you have some agreement like, hey, if you do this for me, I'll do this for you? Are you extending uh any other terms to them? We kind of want to know that. Any consignment sales, okay? What consignment sales means is, let's just say that is usually in the clothing industry, where let's say you're selling a shirt, okay? And what you do is you put this shirt or your inventory, or the stuff that you're selling, in the store, and they didn't buy it up front. They'll buy it from you once it gets sold, meaning that you're fitting the bill for the inventory that you have in their store, and that means that it's on the consignment, meaning it's on their contract. And then let's say what happens is this shirt that's on the rack in the retail store never gets sold. After a period of time, you have to go and take that back. And so, obviously it's kind of risky to advance and on any of those kind of things. So we just want to know whatever those agreements are, so we can figure out how to work that out. Any progress billing payment receivables. All right. So what that means is, typically is usually in the construction space, where let's just say you're doing a concrete job and you were doing a whole slab, but it's like maybe building a school or something like that. Well, maybe you're doing your contract is for the whole foundation, but you're going to bill, but your agreement is, well, if I do 20% of that thing, then I can bill 20% for that foundation. If I do another, so maybe like part of that building, you do your other 20%, you get paid on that. So like, meaning that you have a job or the whole contract, and you have progress billing on that. And it's usually, we kind of want to know, is there a situation where, if you don't do the first 20% or the third 20%, it could kind of affect what's going on. Any build and wholesales, so kind of similar to the consignment sales, where maybe there's some agreement that they're going to hold the money from you based on something that has to be done or something like that. We want to know what that is. Are your obligations to account debtors not fully perform at the time of invoicing? So meaning that the companies that you do business work for your customers, is there some kind of obligation to them where you don't get paid at the time, or you don't do the work do the work at the time that you uh, sent your invoice for payment? Is there something? Is there some kind of obligation? Is there something that has to be done in order to get paid at the time that you invoice? All right. Do you make any sales to any of your affiliates, related companies, or individuals which your executive officers are relationship with? So, so, so under 34, maybe you own one company, but you do business with one of your other companies that provide that services. We want to know, how, what that relationship is between those your companies that you have. So 33E, do you obtain performance or payment bonds on your jobs? So is there some kind of a performance bond, meaning like typically what a bond will come in, or bonding company will come in if for whatever reason, I don't know, you can't finish the job, or you work off the job, and then the bonding company will be responsible for bringing in another company to complete the work. Sometimes a customer will want to have some kind of insurance policy or something in order to take you on as a customer. So that's what that means. Either that's yes or no. Do you buy goods and services for your customer? So maybe you're doing work, you're doing work for them and they're doing work for you. Do you kind of have that relationship between you and your customer? So if you have yes to any of those above, if you can kind of explain that, there's not a lot of room here to explain some of this thing, but like maybe you can do like another document or so forth to kind of explain that. And one of the ways that we're going to qualify your business is for financing, especially if you're a young business, is that we're going to give you credit based on the credit worthiness of your customer. So if you're, for example, if you have a large corporation or a government agency, the likelihood that we're able to provide financing for you is going to be high, because we know the likelihood. But so what we want to know is you name who that customer is. And one of the ways that we check the credit worthiness of that customer is based on the name, the legal name of the company or the organization, the address and telephone number, because that's one way that we're able to check that. And then the amount of money that you expect to make on a monthly basis with that company. So if you can put that. So I wanted to go over the receivable information as well as your customer information. Hopefully on this AR application that provides some clarity. Waldo, is there any questions that you may have that I can answer that you didn't understand that might benefit any of the watchers they're watching on this thing that you might want some clarity on?
Yeah, it's pretty good. It's pretty clear. Yeah.
Okay. Yeah. So like, and I kind of rushed through this. So, if you have some questions on that, please call us or email us and we'll do our best to answer your questions. We're looking forward to work with you, and we appreciate your time for listening to us. Thank you.